Hello, I'm Jerry Romine and welcome back to my channel. The top JP Morgan strategist just came out with an article, 10 reasons to be bullish on stocks right now, and I thought it would be fun and a little uplifting to take a look at those reasons today. Am I ready to be bullish on the overall markets? Not yet, but I still think it is wise to have an open mind, and I'm definitely looking to buy stocks that I believe are undervalued that will come back strong when the bull market returns. And if nothing else, a little bit of positivity is a good thing. So grab a huge cup of coffee and hang on, because this is not your normal stock channel. Before we jump into the top 10 reasons to be bullish, let's do a little bit of technical analysis on the overall stock markets using moving averages. Let's start with some moving average basics. How are moving averages used to identify trends? As a general guideline, if the price is above a moving average, the trend is up. If the price is below a moving average, the trend is down. So which moving average is best for the long term? The 200-day moving average is generally considered the best long-term indicator. Similarly, 50 or 100-day moving averages are used to get medium-term trend, and 10 or 20-day moving averages are used for short-term trends. And what are my favorite types of moving averages? Well, there's a lot of different ones that are available, but these are my three favorites. Number one is the weighted moving average, and this places more weight on recent data and less on past data. Number two is the exponential moving average, and this places more weight and significance on the most recent data points, but it's stronger than the weighted moving average, and that's because it's an exponential weighting. And number three, which is generally my favorite, is the whole moving average, and this minimizes the lag of a traditional moving average while retaining the smoothness of the moving average line. And again, this is the fastest moving average, and it will normally pick up on the trends before the others. We're now looking at the Dow Jones Industrial Average on a normal chart, and these are normal candles where green means it closed higher, red means it closed lower, and you can see I've drawn in resistance here, and we'd love to see the Dow Jones close above 33,317. We're also always looking for higher highs and higher lows. Now let's go ahead and add the moving averages. So we're going to come over here, my simple moving average, go to the study, and then we're going to come down. We want to make sure that the 200-day moving average is showing, and that's this 200 right here. It is showing. We hit the OK button, OK, and boom, our moving average appears. And the simple way with the moving average is if the price is above the 200-day moving average, the long-term trend is up. So we can see we're approaching that, but we're not there yet. And now for fun, let's take this a little bit deeper, and I'll show you how I jazz this up a little bit. So we're going to come over into the settings. We're going to turn colored candles on, and we're also going to turn on the trend label, hit the OK buttons, and poof, we're going to see the moving average trend is now currently showing at none, and it colors the trend for us automatically. So green is an uptrend, red is a downtrend, and we're taking into account a lot of different things on the moving averages. One more thing I would like to show you is we can choose our different moving averages right here. We've got a wide selection of them. And now let me turn on a couple of my other indicators, and we'll show you how everything works together. So we'll turn on the momentum dream, and let's also turn on our lower one, buy sell indicator, okay, okay. And now we can see all of our indicators working together. So ideally what we're looking for is the trend to moving average trend to be going up, and then we also love to buy whenever it is green on green. And now let's take a look at the other major indexes. We're now looking at the S&P 500. The ticker is SPX. Here's our 200-day moving average. We can see our price is almost over that, and we really need to see that price go above it. And once that happens and the other conditions are met, we should also see our moving average indicator turn green. And right now my indicator is telling us our current trend is none, and that's because we're in between going down the bear market and the bull market. And our last major index we want to look at is the NASDAQ Composite. Here we can see the 200-day moving average. We're still below it. Our moving average trend indicator is showing none. We're in between, but we are getting close. So right now, all three major indexes are not yet in a bullish market. That's something for us to watch out for. And now, just for fun, let's take a look at one more stock, and I'll show you how it works whenever a stock is trending up or sideways. And we're now looking at Occidental Petroleum. Using our simple 200-day moving average, we can see the stock is in an uptrend because the price is over that 200-day moving average. Now I take things a step deeper, and you can see the green candle bars show me when I think it's in an uptrend, and that's because we're trying to avoid buying whenever we're in the gray or the red unless there are very special circumstances. So what I'm looking for is the green bars tells me the first phase is in an uptrend, and then we're trying to have it coincide with buy signals from either the momentum dream indicator or my buy sell indicator on the bottom, and these are the ideal times to get in, and that's pretty much how things work. If you want more information on my indicators, the link is down below. And if you remember from earlier in the video, I told you the whole moving average is my favorite, and right now we're using the exponential moving average. So let me show you what happens whenever you use a different moving average. Right now on the exponential, you can see we've got a green trend bar here, we've got a series of green ones here, and then everything else is red or gray. So now we're going to come on over and we're going to change that. So here we go over to the average type. We're going to drop it over to Hull, and I want you to see what happens to these green bars as well as the moving average line. A lot of things are going to change, and that's because the Hull moving average reacts faster than most of the other moving averages, and that's why it's my favorite. So I hit on OK, and poof, look at this. We no longer have the green bar here or the green trend here, and the first time we picked up an upward trend, right now our moving average trend is bullish, was just a couple of days ago, and this is looking at the Dow Jones Industrial Average. So now using the whole moving average with a bullish trend, I would start to look for buy signals, and my regulars know I like to buy whenever we're closer down here to the zero lines, so I wouldn't want to buy yet, but it would be something to watch for. Now let's look at the other indexes. We're now looking at the S&P 500. I've switched it over to the exponential. Let's change this to the Hull and watch what happens. These green bars, and over here there's going to be a change, and our moving average will lower as well. So we're going to hit the apply button, and now we can see our current trend is bullish. And now let's do the same for the NASDAQ. So here's the NASDAQ, currently set on exponential, switch it over to the Hull, hit the OK button, and boom, the first time we could have bought in the last 6 months would be right now because we've entered a bullish trend, but this is using the Hull moving average. And I just wanted to show you how big of a difference it makes on which moving average you use. So explore the different moving averages and find the favorite one for you that you like, and then run with it. If you found the moving average technical analysis helpful today, be sure to give the video a like and a thumbs up, and I'm happy to include more technical analysis in future videos. If I know what you want covered, just let me know in the comments down below. All right, let's cover the 10 reasons to be bullish on stocks right now, according to JP Morgan. Number 1, valuations appear attractive both in absolute terms and compared to fixed income. For example, stocks like Google are available at a 22% discount. Number 2, there are elevated cash levels among institutional investors as well as an appetite to begin putting those funds to work. Number 3, investor sentiment is currently too bearish, and this is often viewed as a bullish indicator for stocks. This comes back to the age-old quote by Baron Rothschild, "Buy when there is blood in the streets, even if it's your own." Do you ever remember a time in your lifetime when stocks like Facebook were selling at a 50% discount from recent highs? Number 4, Federal Reserve hawkishness has likely peaked. The July inflation survey showed inflation expectations have dropped significantly. Number 5, the US dollar has likely peaked for the year. Number 6, the economic slowdown isn't showing signs of a nasty recession. Number 7, higher income consumers remain resilient. Number 8, earnings estimate on the street unlikely to be marked down aggressively. Number 9, excessive savings built during the pandemic are still providing a cushion to consumer spending. And number 10, the global economy will unlikely see a synchronized downturn. While nobody has a crystal ball, I think most of us can agree that stocks are selling at discounts we've never seen before. And if you believe most stocks are going to eventually return to their previous levels, then now is a great time to go bargain shopping. As always, thank you for watching. Have a wonderful day. Smash that like button and subscribe if you haven't already. And if you want all of our trade alerts, indicators, free stocks, and free crypto, check out the links down below. Peace, and I'll see you on the next video.